Time for the market report is widely talked about. Prices headed up.
That's right. Looks like bullishness wasn't confined to just Wall Street, and we'll get into it. But first, the numbers. What were the week's biggest gains and losses? And then, this month's WSDA report. What did it say? And finally, an expert weighs in on what's growing the row crop markets. So, markets closed the week moving up. Livestock pretty much the only fly in that ointment. Let's take a look. The week's biggest gain, lumber up $33.50, a 6% increase from the previous week. The week's biggest loss, lean hogs, down nearly 3.5 cents, and over a 4% decrease from the previous week. So, in lieu of the election, markets also had this month's WSDA report to chew on. Biggest takeaways, mostly row crops, namely soybeans and corn. But livestock also something to watch. Here's what it said.
U.S. wheat supplies up on higher imports. Domestic use also up due to more food use. Exports unchanged. Ending stocks increased. And season average farm price $5.60 per bushel. Global wheat supplies projected to increase due to higher production in Kazakhstan. Consumption also up, mostly due to feed and residual use. World trade slightly lower along with ending stocks. U.S. corn production down 60 million bushels from last month, along with a reduction in yield. Harvested area unchanged along with total use. Ending stocks down and season average farm price $4.10 per bushel. Global corn production up, mainly due to increases in Uganda, Malawi, Belarus, Mozambique, Kenya, and Cameroon. Imports down for China and Malawi, but up for Mexico, Vietnam, Turkey, and Peru. U.S. long grain rice exports down, short grain exports up, but combined, exports overall decreasing. Ending stock increased 19% from last year. Season average farm price unchanged. Global rice supplies up, mostly on higher production in India. Domestic and residual use also up, along with trade. Ending stocks up 500,000 tons. U.S. soybean production down due to less yields. Exports lower due to less supplies and sales. Crush also down due to domestic disappearance in exports. Season average farm price unchanged at $10.80 per bushel. Global soybean production down mostly due to less production in the U.S. and India. Exports raised on higher shipments from Brazil, Canada, and Benin. Ending stocks down mostly due to less stocks in the U.S., Brazil, and Argentina. U.S. beef production up on higher dressed weights and slaughter. Pork production down on slower pace of slaughter and dressed weights. Broiler and turkey production raised while egg production lowered due to hens culled from HPAI. U.S. milk production raised due to higher output per cow, offsetting lesser cow numbers. All milk price for 2024 lowered to $22.75 per hundredweight. U.S. cotton production up while yield unchanged despite a lessening crop in Texas. Exports lowered due to less global consumption and imports. Ending stocks raised while season average farm price unchanged at 66 cents per pound. Global cotton production lowered with largest reductions for Pakistan and Turkmenistan. Consumption also down mostly on reductions in Turkey and Pakistan. Ending stocks lowered with largest reductions in Turkey and Pakistan.
With that context in mind, the experts say there's something here affecting the markets. Soybeans and corn, the name of the game for now, and market analyst Matt Bennet goes into what the analysts are looking at.
The interesting thing, maybe more so than the report though, has been, spreads have been awfully strong. Basis has increased or narrowed, if you will. You've seen the grower get an opportunity at some cash prices that look vastly different than they did in the thick of harvest. And so lead story-wise, I'd say your cash corn price looks awfully attractive as compared to what we've been talking over the last 3, 4, 5 weeks. The thing you got to be cautious with whenever it comes to soybeans, okay, so this report, we took quite a bit of air out of the sales. And so you go from 53.1 down to 51.7. That's a big drop. I mean, I don't recall a drop from October to November, anything close to this. And so, I mean, I have to go back and look, but I don't believe we've ever done this before. So with that being the case, the market, you would think, taking carry out all the way down to 470, that was a bullish report, clearly. The market didn't act like it was a bullish report, but we have had some strength. Post-election on Tuesday night, we were down 20 cents, and a lot of folks felt like, well, there's reason for that. Maybe China's going to back away from the export table. That had been widely discussed, but then here you sit at the end of the week, almost 50 cents off of those lows. So Friday's move, I'm not super concerned with it, but I did think it wasn't quite as good of a reaction as what you would expect with a report that was that bullish. Obviously, Brazil was extremely dry when they were supposed to be dry. But we turn off in October, and we got moisture down there. They started planting. They're on a normal pace. Sometimes in a La Nina environment, they get wetter actually later in the growing season as well. They stay wet. We've had instances like that. I don't think that total overall production looks like it's at a major issue at this point. As far as U.S. production, though, for next year, there's a lot of correlation between a very dry September and October. Everyone was dry, and the drought monitor will show you that. But by all means, this rain was very much welcome that we had over the last week to 10 days. Fortunately, river levels came up just a little bit, and we've got to hope that that continues to happen.
And that's it for a deeper look into the markets. The election certainly had an effect. WSDA did too. But let's not count out weather and supply trends in place before the big news events. As the year closes out and we take stock of harvest, those will be the real factors.